Hi friends, this is Bank Nifty 5 minutes chart on 6th Feb 2023. In this video, I'm going to talk about a very new useful tool called Fibfork. Fib stands for the Fibonacci part of finding mathematical ratios, and the fork is derived from the pitchfork that you are going to see here, this one. So we are making use of two concepts, one Fibonacci ratios and pitchfork, and try to build a new concept and draw line work that can help us identify some great opportunities. So keep this video till the end so that you'll be able to learn something very useful. So let us quickly jump into analysis. The market, after creating two-side manipulation here, okay, so we did not enter any of these moments because we want to see how price may behave after two-side manipulation. Clearly price went downside, creating lower lows, and then we thought that we should be shorting the market when price comes to some areas of interest in this zone. Okay, that is the initial idea. We are short from the market, short from the day of the market. However, there is some minor demand zone that is coming from this zone and is trying to create a market upside. We have identified a long opportunity here, wanted to trade and expect that the price to reach here, but it failed two times, so we have withdrawn our long opportunity and tried to short the market. So let us see how we have identified a short trade idea and how we can make use of the Fibfork that I have mentioned very recently. So now that we are on short bias, when price generally we are expected to reach is this inward frequency line or this slope wash line. So any of these lines we expect the price to reach. However, price didn't reach these one of these lines because had it reached to these zones, it would be pretty easy to trade. But price does something which is always something out of box. So that make us try to identify the edges using some other tools which I'm going to show you now. So price has created a powerful bearish candle once price touched this high. Okay, and look at the price formation here. Here it is a kind of bear trap market manipulation. Now the same manipulation is now being applied in the upward using the bull trap manipulation. That means making the retailers believe that market is going to go high whereas the market falls. So that is a manipulation game played by market makers. This we have to identify very clearly. So this context of market manipulation from this zone from very extreme without not even reaching the inward frequency makes us believe that this is going to be a market edge. Now how do we identify this market edge based on line work? I'm going to show you quickly, and then we will draw Fibfork. So this is standard pitchfork you can draw. You see that the midline of the pitchfork is now being beautifully respected. And now we can draw the same pitchfork, but this time a modified script pitchfork between the price extremes. Okay, I'm going to erase off this 0.618 line. So now you see that two pitchforks are now being respected by price at the same time, creating a bearish candle. And if you also look into relative strength index, price is creating higher high here, RSI is lower low. And again price is creating higher high between these two candles, RSI is lower low. So there is second degree bearish reversal divergence, and at the same time price is creating lower highs here and RSI is creating higher highs. So that is third degree bearish continual divergence, hybrid divergence. That means one divergence within the other, which makes us believe that this is going to be a market edge. So with that note, we can draw a pitchfork to see if this could be some lines. We can believe that price may respect further and then assume short positions. For that matter, we have immediately shorted when the price touched this, created this bearish candle, and we are expecting some lines that this outline of the pitchfork to be respected. However, there is a new concept which I just mentioned that is called pitchfork, which means we draw a pitchfork and then within the pitchfork there are some Fibonacci ratios like 0.25, 0.382, 0.5, 0.618 and 1.618. So in this case we are going to choose 0.618 line and then see how price is reacting to that line. You see that this fib line is now beautifully being respected price. Earlier it was acting some sort of support, is now turning into resistance. We can also draw a standard pitchfork between the same extremes because this is going to be a market extreme. There is nothing wrong in drawing a pitchfork like this, standard and modified with the same price extremes. Now you see that price is respecting the standard pitchfork and the modified pitchfork fib line, fib channel at the same point and creating a powerful bearish candle. So this is the point you could have shorted the market with the stop loss below this high. Okay, there is one possibility. Had you entered shorted here with the stop loss below this low, then what we generally expect is price may at least test this normal inward frequency of proven demand zone. So this is the point where price has retraced back earlier, creating higher highs. Now this is the same zone price may expect to reach. So we have fifth channel here. The same fifth channel is drawn here. So we expect that the price will reach this inward frequency line and then bounce up. So this is about this video, guys, and if you're interested to learn these advanced techniques, please do reach us out. It could be of great help to you. We'll train you on price action strategy, market maker strategy, and Newton strategy, and help you take trades with great confidence. Thank you so much. See you in another video. Bye bye.